Shares of Affirm hitting a 15-month high as Adobe estimates usage of buy now, pay later could reach record levels today. Kate Rooney has the details in today's Tech Check. Hi, Kate.
Hi, Mike. So buy now, pay later options are having a moment this holiday shopping season. These are also referred to as BNPL. It's essentially installment payments. For example, paying in 4 lump sums over time versus using a revolving credit card. They really rose in popularity during the pandemic for those big ticket items. Think of things like a new Peloton bike. Now, though, they're starting to show up in everyday spending. Adobe has some new numbers on that recent boom. For Black Friday, BNPL revenue was up 47% from a year ago. Today, Cyber Monday, it is expected to hit an all-time high. It's on track to contribute $782 million in online spending. That's up 18.8% year over year. And last week, 72% more shoppers were using BNPL plans compared with the prior week. And as Adobe put it, while consumers are showing a strong appetite to shop online, many are giving themselves more flexibility with their budgets and continue to embrace flexible payment methods. Affirm is that pure play leader in the space. It's hitting a 15-month high today. E-commerce in general also seeing a boost. You've got Shopify seeing global Black Friday sales up 22%. MasterCard's Spending Pulse shows pretty strong in-store and online retail sales. And while more spending, guys, could be seen as bullish and show some resiliency for the U.S. consumer, that BNPL bump could also be interpreted as a bit more negative. As Wells Fargo analysts put it, the other side of this, and especially married with this BNPL data point, it's more bearish. RE, the U.S. consumer being more price conscious given the inflationary backdrop, and is opting to chase some of the more deals and discounts out there. Higher interest rates, guys, of course, are a part of this boom in BNPL as well. Back to you.
Yeah, it sort of fits with the whole value, consumers paying more attention, a little bit under further stress. But it really comes down to delinquency rates. Kate, what are we seeing them rise yet in results of Affirm and other buy now, pay later stocks?
Yeah, it's interesting, Sarah. Not yet, and that's something that analysts really watch closely with Affirm. They have made the case that they're able to tightly control that they're able to pull back some of the issuing when it comes to delinquencies, and that they can sort of keep that in check. And they've said it's all tech related. They've got this algorithm that can help them with delinquencies. If we do start to see that pick up at all, it's really something to watch for the consumer. But so far, surprisingly, Affirm has not seen an uptick in delinquencies, and that's really helped the stock after earnings. It's been also highly shorted, so it's been one of those really volatile names out there and done quite well after earnings when they report a pretty steady line of delinquencies, but absolutely something to watch there.